We have to start grounding our policies in facts and recognize that a strong economy is critical for funding progressive priorities. Good evening and welcome. This is Face the Nation. Our topic of discussion today revolves around the country's economy as well as the Trump tariffs. Joining us this evening on the show to discuss about all this and more, we have invited Sujeewa Mudalige, chartered accountant. He's also the former managing partner of PwC Sri Lanka. Also joining us this evening on the show is Dhananath Fernando, CEO of Advocata Institute, Rohantha Athukorala, former chairman of EDB, and also Chayu Damsinghe from Frontier Research. To pose questions from our panelists, on my immediate right is Shiharani's. You too can join in as far as the conversation is concerned. The number to send in your messages via WhatsApp is 076 656 5353. The number once again, 076 656 5353. Let's get the ball rolling with Sujeewa Mudalige, who was a former managing partner of PwC Sri Lanka and is also a chartered accountant. Sujeev has been very vocal about the country's economy for many months, many years. So now the ball is in your court, Sujeewa. Tell us how the country's economy is doing right now in light of the Trump tariffs.
Yeah, so thank you for inviting me. So if you just go back to 2nd of April, so that they called it the Liberation Day, right? So they imposed tariffs of 44%, right? How did this 44% come? We export 3.2 billion according to US data, right? And what we import from there is 400 million. So there's a gap of 2.8 billion. We send 3.2, gap of 2.8. So 2.8 on 3.2 is 88%. 50% of that was 44. You can remember, Shami, the first one was 44. Then it came down to 30. It has come down to 20. So there is debate. Is this the right way to do? Can you take the trade balance and impose tariffs? And all kinds of things are being said. Right? Whether what Trump is doing is reasonable. We are a small country. You know, I mean, leave all those things aside. Changed our way we were taxing on this, right? Which was based on weight. And we went on to HS code. This may be right or wrong, I'm not saying. It may be right, but you can't, that is policy inconsistent. This is what we have been doing for many years, right? Now we have another issue that is coming up at the Hambantota port. Whether the vehicles which had been previously cleared has been properly cleared, has the proper taxes have been paid. I'm not going to comment on that. It's in course. But the fact is, it just shows how inconsistent we are when it comes to trade policies. And we protect ourselves. Then yesterday, I'll give you another third example. I saw yesterday one of the ministers saying that we need to give further protection to tiles, shoes, slippers and sanitary ware. Further protection. How long have we given this protection? What does it mean? So in fact, today, just before I came, this protection is, I was having a chat with our legendary cricketer, Aravinda De Silva. He gave a super example. He said 30 years ago when he started playing cricket, we had protection. In what form? We had our own umpires in Sri Lanka, and when you went to India, India had their own umpires, and when you went to Australia, Australia had their own umpires. Right? So generally, you know, whether right or wrong, I'm not accusing anyone. The fact is, when you have your home advantage.
But you have an umpire advantage also.
You have umpire advantage. So you have basically 13 guys playing for you. Right? What happened about 15, 20 years ago? You got neutral umpires. No more protection. No. It's like you have to globally compete now. You have to up your game. So this is what Aravinda told me. He said, Sujeewa, we have to up our game if we were to win matches in whether it's Australia, India or Pakistan or wherever it is. What are we doing? This yesterday, he said, what will happen? Construction costs will go up back again. Right? And then poor Siripala's daughter in Polonnaruwa, who is wearing slippers and going, will have to pay even a little bit more for the shoes, because there will be further para tariffs that will be brought in to protect the local industry. Even right now, I'm subject to correction, I think there's 1,000 rupees per pair para tariff on a pair of shoes that is brought. So if you can bring from China for 1,000 rupees, the cost is 1,000. You can't sell it below 2,000 because there's a government tax of 1,000. So 1,000 and 1,000, 2,000. Let's sell the shoe at 3,000. So that poor girl who in Polonnaruwa will have to continue wearing slippers. Okay, if not, you'll have to pay 3,000 rupees. If not, can be brought down at a much cheaper cost. So that is why as a country we have not prioritized trade, not just this government. Over so many decades, trade has not been a priority. So we have to. So in my view, this Trump tariffs is really good.
Right. Sujeewa, now we all know that relating to this vehicle problem that Sri Lanka is currently facing, I just don't understand. There were 3,000 vehicles that were brought to the country and distributed among the masses of this country who bought these vehicles in question. How come this was discovered only now? What was the thinking behind it?
So that's the $1,000,000 question. How come this was allowed since, I believe, maybe March or April this year? And thousands of vehicles have come in. No, absolutely. Right, and all of a sudden, someone has woken up and saying, look, I think either we have made a mistake or there is some irregularity. So I'm not saying whether it's right or wrong, but the fact is, it's simply policy inconsistency, the way you apply. But the good news, Shamir, is that yesterday I saw in the Mirror saying, see, the best thing on this Trump tariffs is, we all know 44 became 30, 30 became 20, very good. Let's be honest about it. But no one is giving us the details.
As to how it became 20.
How it became 20 and what have we agreed in return. The good thing, Shamir, is you have been always talking about the high tariffs on the vehicles. Yesterday's Mirror reported that we can now bring down vehicles from the US. So you need to now decide, do you want a Chrysler or a GM or a Ford? Right? You want a GM or a Chrysler or a Ford? Which SUV do you want from the US? I don't know whether it's right or wrong, but this is what the Mirror reported. But the problem
is not concretely
no, for some reason, the government is not disclosing what have we agreed in return for this reduction. Reduction is good. If you take Indonesia, I saw they have said virtually everything other than liquor and meats and pork and a few other things. Virtually you can bring down anything from the US. But we have no idea, and I think it's the responsibility of the government. I think they should come out and say, look, we negotiated hard, this is what we agreed. In return, we got 20%, but this is what we have agreed. We are yet to know.
But we can't expect that, no, because now we sign an agreement with India. The court has already.
What the Treasury Secretary told during the press conference, there is a NDA, non-disclosure
agreement
on this. So they can't.
It will come out at some point. But he also said in that press agreement, saying that we have agreed 3 other things. So I don't know whether that contributed to the reduction in taxes. One was good governance, tackling corruption, and better procurement and transparent procurement. Those 3 were also mentioned by him. So I don't know to what extent those factors impacted on lower tariffs for us. I don't know, but I am sure we have agreed. See, just 1 minute. What can we offer? We are a poor country. What can we buy from US? Hardly anything. If at all, it's oil. But you can't bring crude oil because our refinery can run only for Iranian crude. So you have to bring refined one. Vehicles, Californian wine. What can we buy? You can't buy. There's very little that we can buy because we are a poor country. Very little what we can buy from the US.
Even if you have agreed to bring down vehicles at 0 tariffs from the US, the affordability of those vehicles is going to be extremely difficult.
It could be pharmaceuticals, it could be some agriculture machinery, I don't know. So we can't speculate. I mean, we can just only, but that's where it is right now.
But there's also discussion about tea exports getting a 0% tariff as well in terms of exports. But all these are not concretely disclosed by any party yet. We now move our attention towards Dhananath Fernando, CEO of Advocata Institute. Dhananath, you always say stories about cricket and all that. Now, today, what's the story you have in store for us?
Sujeewa taken over the cricket story with a real example.
He has already taken it over. So now today, what's the story that you have?
Bowled out today.
So Dhananath, let me pose a question to you now. You have been very optimistic as well as pessimistic about the country's economy. You say that last time you came on the show, you said that We can just stay on the wicket without batting. Nothing is going to happen, but we're not going to hit sixers at the end of the day. Given the fact that Sri Lanka has to do something, now our growth rate is at 3.5%, but based on what economic experts are saying, we'll probably hit around 5% by the end of the year, even if we don't do anything. If there are no aftershocks, if everything is going to be okay for Sri Lanka, we are going to hit around 5% anyway by the end of this year. In your opinion, what are we doing wrong in terms of the economy right now, given the current context?
I think the economic growth rate is, in the first quarter, it was about 4.8%. So as you said, I am optimistic that we can reach to about 4.8%, 5%. But in terms of your question, what are we not doing, what are we doing wrong? First was the electricity tariff, amendment. The reversal of the previous amendment was something shocking. That is actually one wicket down, because for few reasons. One is, we all are aware that the electricity prices has to come down. What the IMF program says is cost reflective pricing. That means even if your unit cost is 100 rupees, when you make it 101 rupees for the consumer, IMF will be happy. But what we need is for industries to electricity cost to come down. But today what the amendment says is that we are going to keep it pretty much, on one side we did a rebundling, on the other side we kept most of it under the government control. What we all know, for electricity sector to bring the prices down, to avoid these monkey stories and cutting down solar and all that, you need to have a massive investment on the grid. It was agreed, even it was discussed at the parliamentary committee, we need about 5 billion to 8 billion in the next 4 to 5 years, and that is 5 to 8 billion, Shamir, it's above our reserve levels, and there is no way that
it's $5 billion.
$5 billion, $5 billion. So that is very difficult for a government to raise that amount of money, for simple reason, when you raise that amount of money under government control, your debt to GDP ratio is going to skyrocket. That will heading us for another default. Second, already there are guidelines from the central bank for the banking sector to lend money with the single borrower limit, and with a weaker balance sheet, none of these institutes can go and borrow money from the private sector. They will be again facing into trouble. Okay, let's forget all that. Earlier there was an option under national interest, the treasury gives a guarantee, and then they can show that guarantee and borrow money. Now that option is also closed, because actually the CEB went to get a loan for about 50 million US dollars, and then now according to the new guideline you have to do a risk analysis, and after that risk analysis the Asian Infrastructure Bank decided that the risk that the treasury has to pay to issue this treasury guarantee is about 4.8%. so at that, on top of it, the general normal interest rate. So at that interest rate you cannot raise capital to upgrade our grid. When we cannot upgrade our grid, that means that the electricity cost will not come down, and that will impact households, industries, all exports, everything. And starting from taking the baton from where Sujeewa stopped, we all talk about export diversification and exports, and Sujeewa said apparel, it has been flat for the last 10 years. So in moving forward, actually our export basket to diverse, one option could have been energy, because it considered a merchandise export. If we export energy to India, that could have been an option, but without bringing the cost down, it would be very difficult. Of course it's a long shot, we have to connect the grid, and there are so many reforms that needs to happen. But even by having a very higher tariff, higher cost, we are basically restricting that as well.
When you speak about energy, what comes to my mind is, Dhananath, about this Adani project that was cancelled by this government. I recollect even the executive director of Advocata Institute, Murtaza, has been very critical over this deal as well, saying that this is not the way forward. What are your thoughts on this? Do you think that if the Adani project did go ahead, we would have had a good chance of exporting energy back to India?
My view is, Shamir, it could have been on a competitive basis, because without the competitive process you really cannot determine what's the right pricing point. because when you give it on a platter, or when you have a unsolicited proposal, it would be very difficult. So I am fine with Adani or whoever, but following the proper process. That's what even discussed, having the proper procurement process and the guideline, because otherwise now also with what we just a short while ago what we heard with India getting a 50% tariff, we need to understand the second thing that we are not doing right is on managing these geopolitical tensions, because earlier we only had to worry about two things: managing India and managing China, and now we have to think of a way of managing China, India and US, and we are in the middle of it. And of course with India getting 50% tariff, Shamir, it would be very difficult for us to manage without having proper investment on the geopolitical front and the foreign ministry front. This is beyond economics. In a way it's economics, but beyond economics, because this is going to be a very strict...
But the Adani project, Dhananath, came with a lavish basket of FDIs, which was approximately $1 billion US dollars. Now you speak about $5 billion US dollars investment if we are to expand our grid. So at least 1/5 of it would have been covered by the Adani project if they did come to Sri Lanka, and if it was on a competitive basis for the country. Why couldn't it be renegotiated and looked at very positively and optimistically for the betterment of the country?
No, absolutely. It could have been renegotiated, but on a competitive basis. That should have been the way forward. But unfortunately what we are doing is we are reversing it now. We are trying to keep the control. The coal, hydro, everything. Hydro anyway under the act, it was even earlier supposed to be under the government. But now we are trying to rebundle, including the LECO, we are trying to absorb it, and we are trying to do the restructuring with a 2-year time period. And it would be very difficult, Shamir, because after 2-3 years we are heading to an election, and before an election no one will really do any restructuring.
Yeah, very quickly, Dhananath, on this SOE restructuring, I think there was a lot of work that was put in by the Ranil Wickremesinghe administration in terms of restructuring the CEB, restructuring Sri Lankan Airlines, restructuring most of the SOEs that were making losses. Now that is not on the cards with this government. Am I right? Or
as far as I see, and but we also follow the news stories, so I think it's slightly on the back burner, but the most optimistic that we can expect is they will try to set up that holding company and bring everything under the holding company. But I am sure you may have seen on today's news reports that the first round of talks on Sri Lankan Airlines, the bond restructuring has failed. And one reason why S&P has not upgraded our country's credit rating is because of the Sri Lankan Airlines bond. And I'm sure all the investors know when you have a poor country credit rating or a sovereign rating, it's fairly difficult to attract investment, and that's the challenge on cricket terminology. So we lost 1 wicket today by reversing bringing some amendments to the Electricity Act, and by not investing these 3 completely different stakeholders on foreign foreign services front. I think we are at the edge of losing another wicket. I hope that the government and the authorities will make the necessary decisions.
So we are already around 3 wickets down. We have 7 more to go. Will we get out by the end of 2020?
We have to wait and see. Maybe Aravind is in the wicket. Coming back from retirement.
I now move my attention to Dr. Rohantha Athukorala, former chairman of EDB. Rohantha, you were also sitting on the board of Sri Lanka Tourism at one point. When you look at the figures now in terms of Sri Lanka tourism, it has boosted. Wherever you go, you speak to anyone, you go to a flight, all the flights are booked from Qatar, from Dubai, from China, from Russia, from India. It's very difficult to get a seat onwards Sri Lanka, to get a seat, and coming to Sri Lanka is very difficult because the costs have gone really up, because this is a season. This was supposed to be the off season, but we are seeing 200,000 tourist arrivals just last month as well, as recorded. Aren't you optimistic about the country's tourism arrivals as far as our island nation is concerned?
See, Shamir, I mean, I'm very positive towards the overall manner in which the country has been run. I mean, that's my positioning that I would put in, and the logic being that there is governance, and there is a very passionate whip towards trying to arrest the corruption that existed at one time. So I mean, at the outset itself, I would say that I'm positive. Whilst I say this, yes, in terms of tourism, recently we won the accolade of being one of the best islands globally, and it was a survey that was done among the top 70 islands in the world. And when you look at the other 49, you realize that Sri Lanka is strong with regard to our product range. So product is strong, but you cannot evaluate the health of an industry by just looking at the logistics. Meaning looking at the airlines and seeing what kind of occupancy it's bringing in is not a reflective of the industry. So if you're looking at a very neutral way in which independently want to evaluate the industry, you need to look at what kind of profitability does the industry give for someone to come and invest quantitatively. So if you look at...
So are you trying to say that all these tourists who are coming into Sri Lanka are poor tourists who are not bringing enough revenue to push the threshold to around $400 per tourist who's arriving to the country? Because right now, as we know, it's around $150.
See, currently it's $167, like you very rightly said. So the question is that if you look at the cost structure that has increased in a typical property, now if you don't have at least 47 to 50% occupancy, you don't cover the cost. So if you were to go down south and check what the occupancies are, currently it ranges between 30 to about 45%. So things are rough. If you look at the city hotels again, you will see that same kind of vibe coming in, because you'll see that the occupancy rates are lower than your break-even point. So sometimes, a 5-star hotel can be sold or actually bought at $60 room. Now, why would you want to do that if your product actually holds $150 to $100 kind of value? So it's not coming through in terms of the profitability. That is a more quantitative angle. But if you look at the qualitative angle, you got to look at in terms of what kind of goods and services do these guys buy.
So when you look at the numbers, I just want to clarify this, Rohantha. When you look at the number of tourist arrivals to the country, now last month alone was 200,000. So are you trying to tell the people of Sri Lanka that these tourists are not high spenders? Are you trying to tell me that all these tourists who come in are not occupying the top class hotels in Sri Lanka? Is that what you're trying to say?
That is for the statistics. So if you are looking at the data, that's how the industry numbers are seeing as we speak right now.
If you look at the Colombo hotels, most of the hotels are going at negative revenue at the moment.
That says it, Shamil. You know what I'm saying? So you have a...
No, is it something that we can boast about? That's what I'm asking.
It is not. I mean, that is why theory says that you have to position your brand globally, and you got to give a reason, an RTB, a reason to buy your brand. And what we have been saying for the last 15 years is that unless you position the country right, you will not get a $250, not even looking at $400 tourists. Let's say $250 tourists. For us to get that benchmark coming in, you got to give a reason. Now that reason is not clear globally, and that's why the private sector is saying, when the new government came in saying, we have to do this. So it was said January, it was told March, then it became June 26th.
If you look at the hotels in Sri Lanka, now in Colombo alone, you have several 5-star plus hotels. Recently we saw John Keel's opening up their venture in Colombo. We know that Haley's group is investing in Negombo very heavily. As well. Then we see the Hilton coming up in down south, very massive, big property. So what is this reflection then?
See, it just tells you the sentiments which are on. People are saying we are yet hopeful of this industry, and actually you talk to anybody around the world and say what is the low hanging fruit, they say it's tourism. So obviously people are saying let's cash on this rather than looking at exports, because exports is a more longer term process. So many reforms have to happen, but tourism is something that we can earn some quick money. But again, the question is that we are very serious about a 3 million kind of number going in. And you are talking about that we are getting 200,000 tourists coming every month. But then the question is that we are currently at about 268, 270,000 tourists coming in. And if you look at the target that is set for 3 million end of the year, we are going to fall short by about 500,000 tourists. So the point is that it is not, again, my argument is that it's not just the logistical terrain that's going to determine the success of industry. The success of industry happens when somebody says, I'm making some good money, come and invest in this particular sector, which we are not seeing right now. And even if you look at the investments that are happening, it's more for asset enhancement than profitability. So if you look at and analyze who are the people who are partnering, you see they are looking at long-term gains. So we have a problem to address. And Shamir, my argument is, I just go back to the theme of today's topic and just going back and asking, the theme that was mentioned before by a speaker was that also put your house in order. Currently, every month the government borrows 700 billion to keep the home fires burning. Every month 700 billion rupees is taken from different kinds of financial instruments because your expenditure is more than your income. 700 billion is equivalent to 8 highways to Katunayaka. So we have a larger problem to address. We have to put our house in order. So we have been saying that we need to have this tourism campaign going because that is the first thing that's going to position not only the industry but the whole country. Because we are looking at identity globally. But secondly, and the most importantly, is that we are not trying to address as to saying, how do I reduce my cost?
Right.
And how do I make my interest coming out? Now, a point to really understand is that even if you double your current revenue methods, that means you pay your taxes to about 36%, you take your VAT up to about maybe 70%, you put everything double.
70% VAT?
If you put yet, you can't cover the cost. If you double every single tax element, yet you'll have to borrow to keep your costs going. So it's a very serious issue, Shamir, because we see from governance point it's fantastic, but then the question is that here the expenditure is not being managed in relation to your revenue.
Right. Thanks a lot, Dr. Rohantha. I now move my attention to Chayu Damsinghe from Frontier Research. Chayu, now today we saw the manner in which how Trump had threatened and had imposed a 50% tariff on India. Now, as Sujeewa mentioned, most of our big boys in the apparel sector has already gone to India. If you look at companies like MS, for that matter, they're setting up a very big plant in Odisha as we speak. What sort of a negative impact is this going to create in the long term in the apparel sector for Sri Lankan investors who have gone there? Because right now, if you look at the competitive advantage, Sri Lanka is in a competitive edge because we have only 20% and India at 50%. So when you go and set up an operation there, and if you start exporting from that country, the tax is going to be higher. As a result of that, Sri Lanka will be at a good edge. How do you see this comparison?
Yeah, I mean, the place that we are in right now for the world, where tariffs are, coming up and coming down day in, day out. I think part of the point is, I don't know whether tomorrow it will be 50%. It might be 20%, it might be 0%, it might be 200%, right? You cannot really make a decision based on that. And I think that is really where the business decision for any firm, any sector in the world right now becomes very, very hard. Because you don't know what the future operating conditions that you're working in. The world is in a pretty dramatic point of trade, restructuring trade contexts globally are changing, and the US is really trying to push some of that, a big chunk of that change themselves. So what does that mean when we move forward, right? So if you, I think, I'll just use one specific example here that I'd really like to illustrate the context of this. US tariffs on solar panel imports into the US were quite high from about 2018 onwards, essentially north of 50 to 100% depending on what particular product you're looking at. They increased it once again at varied levels. Some of increased by another 100%, another 200%. On some Cambodian firms, they increased it to 3,500%. So at that point, if you're a Cambodian solar panel exporter to the US, whatever you do does not matter. You could not have prepared for that by any context, because that was just a very an extremely idiosyncratic move. You might find out a year down the line that's back down to about 50%. And how do you make a business decision in a context like that? So I wouldn't necessarily take the view that the tariffs that are on right now for the world at any point anywhere is necessarily the static level that they're at right now, but I would take the view that these things are probably going to change, and that change, that volatility in the tariffs is probably something we'll need to expect. I mean, if the US, for whatever reason, right, I mean, it's through the lens of Donald Trump and whatever he currently views it as, but the fact that he's able to do it right now, and he tried to do it in his first administration, but wasn't able to go this far, that showcases there are incentives in the US system, that are safeguards that perhaps don't exist in the same way anymore. People whose views have changed since then, that are no longer in the administration. The structure of the whole system has changed, and that probably means that even if it is not Trump, this kind of thing probably continues. I mean, the point there is the Trump tariffs that came on in the first Trump administration were continued by the Biden administration. They did not take those away. They continued that. The tariffs on China, the tariffs on, again, the solar panels, those are great examples. So I would very much take the point that for Sri Lanka right now, it is a very interesting point, because we are coming out of a default point. We have changed very much the structure of the economy, and I think everyone here spoke about varied aspects of the varied facets of how the economy itself has changed, and we also talk about the global economy changing, right? One positive thing there, I think, touching to one of Sujeeva's points there, is that Sri Lanka, I mean, our merchandise exports about 13% of GDP. That's barely anything. But the positive thing is that the fact that we haven't increased our exports in the past means that we are a little bit more insured against what's going on globally right now. So, for example, Vietnam's exports to GDP is something about 90%. Even at 20%, even at 10%, they're probably going to take a much bigger hit on their economy than we would at 30%, even simply because the size of exports to the economy is so much larger. And those are fundamental shifts that are happening in the global context now.
Yeah, but Chayu, just looking at what Sujeewa said now, if Vietnam is only exporting that 90% to the US, then it's a problem. Then you have to diversify that basket as well. Then you have to look at other countries as an option as well, just not the US. Right?
Yeah, I think the point there is that globally, since about the last, particularly since about the 70s, but specific even before that, since the 50s, the global economy has fundamentally functioned where the US is the consumer. There is no other consumer that has the same power as the US, no other consumer globally that has the same consumer power as the US. They call the US the consumer first and last resort for that kind of idea. And the point is that most other countries in the world, their consumption is based off their revenue that they sell to the US.
But if you look at the war that went on between China and the US in terms of the tariff, it came to somewhat of a lull after a point, because China was also raising its tariffs. But if you look at the population, the US has only 340 million, whereas China has 1.4 billion. So would it be a same war that we'll be experiencing with regard to India and the US as well? Because Indian population is 1.451 billion against 340 million people.
So I think I don't think the retaliation that China did on the US was really much of a factor there, because the US barely exports anything into China. The Chinese consumer isn't really a high consuming kind of economy. That's not the kind of economy China is. What moved the needle there, from what I understand, is that China started putting on controls over their exports of rare earth metals into the US that US needs for strategic reasons. So it was less of a retaliation on tariffs and retaliation of what China specifically sends to the US, a decision the Chinese took.
So would India have the same?
India doesn't have rare earth metals it sells to the rest of the world. India itself is a consumption economy. It's not a production economy. So it doesn't really have that same kind of heft.
Leverage.
It doesn't have that leverage, right? So the Indian story, right, I mean, the problem is whether they're buying Russian oil. But again, 2 months ago, the US president, the Russian president was a little bit more cozy with each other than they are right now. So who knows, 2 months down the line, they might be friends again. And the entire thing about
Trump after all.
It's Trump after all. We can never say. And I think that's the problem right now. You cannot make a decision. 2 days later, he will change his mind. And you can't make a business decision in this context.
And the best part is, 4 years from now, when he has to go home, what will be the policy of the US subsequently?
Who knows who's going to run? What if his son runs and he says, Donald Trump is going to be special advisor to Donald Trump Jr.? What does that mean, right? Like, you don't know what the US is going to do.
Maybe he's learning from Sri Lanka.
Exactly. I mean,
I don't know, Rohantha.
perhaps that's the kind of export we can do to the US.
So I want to open the floor, but before that, with your permission, Shihar, I have a question for Rohantha from one of our viewers, Fernando. I want to pose a question to Rohantha. Sri Lanka has undergone tremendous changes. Nation brand valuation had been done by you several years ago. It was around US dollars 100 billion. What's your recent assessment of the nation-building valuation in terms of its individual components, such as tourism and exports?
The last study that was done was around 84 billion, Shamir, and normally the nation brand value is very close to the GDP value. Normally it goes hand in hand. So what we were saying and what we were estimating was that if we could have hit 100 billion, the chances are that the brand value would also pick up to about 100 billion. And what research shows is that any country that hits 100 billion, they are into the sweet spot in terms of a major shift globally. They see that. So if you take Croatia, Estonia, classic examples, that as soon as they cross that number, there was an exponential growth on exports, there was an exponential growth on tourist attraction, and also FDI's attraction. So these three components have a positive correlation. So currently, we are at about 85 billion because our economy crashed. We lost about 7.8%, and then again we gained. So we are at about 86 billion, which is somewhere close to the nation brand value that we have. But very important point to note, Shamir, is that you can't go and build a nation brand value. You can't have a campaign like what you see in the papers in the last 3 or 4 months, that we are driving a nation campaign to drive brand value up of Sri Lanka. It doesn't happen like that. What happens is that because of the good you do and you become a good citizen, the world perceives you to be good. And that's how the value of a nation brand goes. So, for example, classically is that you always say German products are good quality. Why? Because the products that they have given us has made us to use those products, and we say they are durable. Everybody goes and says, guys, you want a credible product, buy German. So that same thing must happen to us. If somebody did Sri Lanka today from the world, will the whole world shout and say, I want Sri Lanka back? Now, if that is done, then it means that your nation brand is strong. So this whole thing of saying I want to do a huge global campaign to move my brand value up to 100 billion, I'm just taking extension of the question that was asked by Srinath, is that you can't do nation brand value building. Nation brands are never built by advertising campaigns and what you go and tell people. It's what the people inside the country talks good of you, and how the world says, I can't stay without you.
So, Rohantha, now if you look at the last few years when Fernando was the Minister of Tourism, we saw many campaigns that were running outside the country. They went to India, they went to Europe. But for the last 1 year since this government has been in power, I have not seen such campaigns taking place. Why is that?
See, two things.
Because I can give you a classic example. Even the Sri Lanka Tea Board is not sending their representatives for overseas exhibitions because of budget cuts. But what the Tea Board is not realizing is that is an investment for the future, because if you send a representative, he can do a ground search of the brands that are available, what is going on in those countries, what are the new trends, and report back and file a report accordingly. We don't see this happening in the last 1 year after this government came into power. Why is that?
See, two things, Shamir. You have a thing called a push and you have a pull. Now, we have seen on and off a pull taking place, like for example, a digital campaign being run in India, which is supplemented with a campaign which is done where you're taken 5 different regions and you've gone to their respective tourism summits or exhibitions, and you put your booth up, and then you try to see whether you can push, your brand. So people come, they look at all the properties there and they say, okay, I'll take 100 rooms here, and then you contract, somebody else comes with your competitor and he says, no, I can give it for 98. Now all that is a push. Now at one time in the earlier government, they had a kind of a more aggressive business building agenda, because that leadership had that kind of trait in it. So obviously he did a bit of push and pull using digital campaigns. So now with the new administration coming, which is more to do with governance and procedures and processes, what happens, it has slowed the system.
Will that affect tourism in the long run?
Obviously.
So what we're seeing now, this 2.5 million, is the hard work of the previous government.
For years. And it's not only the government, Shamir.
So you're saying this may dwindle if we don't accelerate our campaign right now.
Shamir, there are two things. One is what the government does. The second is what the private sector does. I mean, the private sector, basically 99% of the tourism industry is by the private sector. They go all over and do their own global campaigns. I mean, they don't have the muscle to buy big media. But the question is that the private sector is doing something good, which is why they're getting their numbers. But then what the research shows us that if you build a strong identity, you pull the consumer. And now we have a fantastic chance because Maldives is in disaster mode. You know, they are going to a financial crisis. Normally they spend about $10 to $15 million on a global campaign. Currently they don't even have $100,000 or $200,000 because of the cash crunch. So we have an opportunity because of that vacuum to be a little bit more aggressive, because whenever you go to any global exhibition, your next stall is Maldives.
No, but now Sri Lanka has granted 40 countries access free of charge to the country. Now this is eventually going to give a boost, right?
It will, Shamir, but we have to understand that this free access is a push strategy. It's not a pull strategy. See, if you want to pull your brand, you have to have an identity, and I commend the government for being righteous, and they are the best people possible that can actually drive this very complex procurement process, right, which a lot of people can ask questions, and make sure that we can do this right for Sri Lanka after 15 years.
Sujeewa, now are you in agreement with Chayu when he said that it's somewhat good that our export basket is not diversified as much, because if that was the case, we would have been at a complete soup, given the fact that US is one of the largest consumers in the world. I don't know, I'm just trying to ask your opinion on this. You can duck that, you can leave it as Dhananath always says.
I have slightly different
in cricket language.
It's a bit of a bouncer, but I'm willing to, without ducking on that one. Just before I come on that one point that we haven't touched on, is on these apparels. They are the guys who are really impacted on this. No? We have to keep in mind, fabric is the main input for this. No? Where does it come from? China and India. So if by chance President Trump is smart, I don't know whether this has been discussed, you want to see your country of origin on this. If you are going to send me apparels into the US with fabric being bought from China, something that we need to be mindful of. But now with 50% tariff on India, the same question can be asked again and say, because see, on the 5 billion tariffs, these are approximate numbers, sir, but 2 billion is fabric. Out of the 5 billion exports, about 2 billion is fabric on this. We manufacture a little bit in Sri Lanka, right? So if you say about 1.6, 1.7 billion, say 300, 400 million is manufactured here, is virtually half are from India and China. So that's something that we need to keep in mind. Even though we have got 20%, and on this 20% I think some clarification is required. I mean, this 20% is on the FOB value. See, it's like this. Say your shirt. We are selling to whoever the brand at $5. Currently, our MFN duty structure varies from about, I think from about 5 to 35% is what it goes. It can be even some 3-4% sometimes. Say it's 5 to 35%. Say currently it's at 10%. So on the $5 what the brand is paying you, right? So there would be 50 cents duty on this when it hits a US port. But now when it goes to 20%, right? So you'll have $1 being hit on this, right? And you need to keep in mind this is on top of the existing tariffs, right? So but the balance part, they will sell the shirt for $20 or $30. There's so much, you know, You go to New York, on those main streets, you have to have your showrooms, warehousing, shipping, all that comes in.
You'll be lucky to buy a shirt in New York for $20.
I agree on this. So that's why they keep a huge margin on this, right? They have to, because otherwise, they're also running a business. So you have to keep in mind it's on the FOB value of this one. So it doesn't mean that a $50 shirt will go up by 20%. It's on the FOB value that we invoice. The duty is calculated on that. So second point is on this fabric issue. Third point is your question. I think we need to diversify. But I'll tell you a few areas where we have struggled to diversify, successive governments. Right now, Shamir, we have about $1 billion in the pipeline on mining. On mining, investors are lining up. Successive governments have made sure that we don't explore the opportunities in mining. Not just this government. Successive governments have not done this. The thinking of the officials is, we have had this for 2,500 years, we need to keep it for another 2,500 years. So nothing has happened in our mining sector. There's enough opportunity right around, especially on the East Coast, for us to, so if you can get say $500 million, our exports are only 10 or 12 billion, 5%, extra 5% straight away on diversification. And there are investors currently, there's about $1 billion in the pipeline. Right, number one, on diversification. Number two, I think warehousing and logistics is a big one on this location. We have been talking about location. We have done very little on this. Right, I think we need to invest on that area. Education. We just don't know the current policy on education. Foreign universities want to come and set up here. We don't know the policy.
And then they take a complete U-turn on certain
matters. So that's the policy inconsistent. But currently we don't know the policy on private sector education. Higher education when I'm talking about it. Right? Then there is, I don't know whether you can remember, for the last 5 to 6 years there's a cable car project. Right? I think it started during President MR's time. He couldn't push the project. President Gotabaya couldn't push the project. President Ranil Wickremesinghe couldn't push the project. President AKD also can't push the project. Stuck. That is Nanuaya to Lake Gregory cable car. Because right now there's no train connection from Nanuaya to Nuwara. So this should have been super one for tourism, for what Rohantha touched on. You can't get this project going. Right? There are numerous renewable projects which are stuck at officials level. Either it's environment issues, it's land issues, power purchase agreement. We just can't. So there is investments that is possible. And current BOI chairman is trying his best, I must give credit. But you just can't push this because it's getting stuck at it's not the government. It's at the officials level. These projects just can't go through. I give you 3 examples, right? Mining, renewables, cable car project is just 3. I can give you enough and more. But that's diversification, right? But so, in my view...
So, Chayu, are you in agreement or can you move?
Okay, no, so I'm not saying that diversification is not needed. I'm just saying that, ironically, because we haven't diversified, we're in a slightly better position to meet this current moment. And that's part of that, I think, structural change, even for the Sri Lankan economy right now. I mean, just that, I'll take the renewable points as a great example, right? We know the renewables are being stuck at the approval stage. We have these problems with the tariffs they're in. But the amount of energy being generated by solar panels has absolutely massively gone up, despite these, and sometimes through this, regardless of this fact. And I think that's the point therein that I make, right? I think from early 2024, we had about 2 gigawatt hours of solar energy generated per day. Right now, it has not just doubled, not tripled, it has quadrupled. It's about 8 gigawatt hours of solar energy a day, and that's ridiculous to happen in the context of what Sri Lanka's economy is going through. And I think that for me is the kind of indication of what underlying. We don't have the same kind of administrative pushes that successive governments has failed, that we don't really have the procurement processes working properly. Despite that, there is kind of things happening on the ground, and that seems to be more private sector activity there. And for me, that is the kind of structural change that the Sri Lankan economy has not been able to do ever before, really. And now, suddenly, for whatever reason, underlying, we are able to push some of those projects despite those kind of restrictions. And for me, that is a new context there, even to the port services.
So if I just come in on this diversification, see, we know that if you're going to look at new product sectors to be brought in terms of driving the global market, it needs a lot of reform and it takes time because of the value chain. But we have a quick win in the export basket, which is that we see a 30% growth in the ASEAN and the African markets in 2025 in the first 6 months. There's a 30% growth. So, which is ASEAN, namely India at 31%, and which has now overtaken UK as the second largest export country. And then of course, we know that African market is booming. As you know, a lot of people are playing the game in Ethiopia and South Africa and around that vicinity. So, my view is that if we can strengthen our export thrust, where right now we have a trade office in South Africa, and we have 2 like consulates with like 1 room, in the other 2 markets. So ideally, if we can strengthen that with a trade officer, take part in some strategic exhibitions in that region, it will be a push strategy than a pull, because we don't have that money for pull, and see how we can penetrate the market and see how we can build that. I think it will be a quicker win than actually trying to see whether we should diversify the total export basket. Secondly, is that if India is doing so good, why don't we at least, now we have 159 majority in Parliament. So are we going to stay with the free trade agreement with India? Why not move it into a comprehensive economic partnership agreement? Because see, 1 year has gone. If you were doing reforms, I think this was mentioned sometime back at one program, is that reforms has to be done the first year, first 90 days, first 100 days, because your popularity is very strong. And then, it drops just like every other country. So now doing those huge reforms to look at a comprehensive economic partnership, it will be tough.
But Dhananath, now Rohantha is saying reforms are important, but you said that we have taken a back seat on most of the reforms that were going to be implemented under the Ranil Wickremesinghe administration. How do you view this development?
On some reforms, mainly the governance front, I think it's moving, but on the economic front,
in terms of anti-corruption, all that.
Anti-corruption, which we can see some activity, and I think it's moving forward. I'm not an anti-corruption.
No, what do you mean by activity?
No, activity in the sense
happening, right?
no, activity in the sense the corruption cases are moving. Maybe my wordplay wasn't right, but what I meant was...
You're not trying to say this is a drama, right?
No.
Increasing the capacities in the
Sujeewa.
No, on the economic front, Shamir, for this the Transformation Act, which was, it under any form, basically you have to, on the BOI front, on investment attraction and sorting this land issue, that has to move forward. Second is on the energy, that fairly reverse, that was one of the main concerns. At the same time, the labor reforms has to take place, because without those factor markets, land, labor, capital, entrepreneurship, without allowing those variables to move freely, it would be very difficult to run this investment drive. At the same time, your trade and investment has to go hand in hand, and on top of it, this geopolitical pressure is immense. Now, for an instance, even if we have, I think Sujeewa mentioned that Daily Mirror has reported sort of a tax-free imports of vehicles from the US. Now, if it actually, whether we don't know whether it's true or not, but whatever that we have agreed will bring immense pressure on us. Now, imagine if we have actually agreed to bring US tariff-free cars. Do you think the Japanese government is going to be happy with it? Because Toyota has been one of our main car importers, and they are the champions of our official creditor committee. Do you think the Chinese government is going to be happy with that? With their BYDs coming into Sri Lanka, they are going to aggressively push us, and we are getting into a massive and also India also manufactures certain products. So on top of it, all those reforms, now you have a new kid on the block, that you have to invest a lot of resources on geopolitical management, which was not the case about 3-4 months before, and now you have to invest your resources on that front as well.
My question is related to that, Sujeewa. Now today President Trump imposed additional 25% tax tariff on India, purely because they are buying Russian oil, right? And he also imposed 10% penalty tax on Canada because Canada endorsed, I think, Palestine last week. So basically, given unpredictability of Trump, and Sri Lanka needs China, Russia, and India. We can't basically get away with those countries. What Sri Lanka's strategy should be to handle Trump?
So good question. So first, I agree with what was said. See, one of the biggest issues we have is SAARC has been an absolute flop. So because of that, we hardly trade with any of these countries. If you take ASEAN, they are on a different planet. They trade within themselves huge amount of volumes, right? We just hardly do. But I think on record, must say Reliance, right, has currently working with 5 companies. I wouldn't mention all, but I will tell you what it is in the public domain to take our products to India, right? Ceylon Cold Stores is one, where they're taking some of their soft drink brands. Melbourne is one, where their biscuits are being taken. And one other project, altogether 5, the other project which is in the public domain is one of Murali has put up a canning factory exclusively for Reliance. I mean, that is great because we've struggled generally in the past getting access to India. And here we have one of the largest companies supporting 5 of our companies here in Sri Lanka to get market access. I mean, that is fantastic. And I think we must place on record the support that has been given. But to your point, I mean, the biggest issue is whether we like it or not. Chayu, I mean, we have to face Trump, no? And then my point of view on this, forget about what Trump is doing, because we wouldn't know tomorrow whether we would be at 10, 20 or 100%. Right now, we didn't know on India they were at 25%, we were talking. 1 week after, all of a sudden they had 50%, simply because you are buying oil from Russia. Right? We wouldn't know what is in store for us. Let's get our house in order. I think it's a damn good wake-up call. So what do we need to do? I mean, I don't know whether you can remember, maybe Rohantha may be able to remember. In 1990s, we talked about a single window for our imports. And we had something called a EDI or something, electronic data interchange or something like that. Right? Single window. Still we haven't done. 30 years down the road. Not done. Because there's no emphasis and focus on trade. We have to trade whether we like it or not. We need consistent policies. You can't have a case where Temu and AliExpress new rules. You can't have a case where new rules are coming in for BYD overnight. You can't have one and say all of a sudden there's protectionism being given to certain sectors. So those are all inconsistent policies. So we need real focus on trade. We need to make sure that, because we are very protective, no? So we have built so much of barriers so that we can't plug ourselves into these global supply chains. And we need to know, Shamir, what are we good at manufacturing? We can't manufacture everything. We must know what is it that we can manufacture. The thing that we can't manufacture on a competitive basis, there's no point trying to manufacture. Just no point. Take Australia. 10 years ago, they closed down the car industry. They don't know. Can you believe they don't even have an assembly plant? Because of policy inconsistency, I'll tell you one thing. A couple of years ago, so many companies started assembly plants here. No? Now, you tell me whether anyone is buying a car assembled in Sri Lanka with all these EV cars coming in. Shamir, would you buy? No, because you have brand new cars which are coming in, maybe even at a cheaper price. So all those assembly plants, so that's trade, right? We gave incentives a few years ago saying so many car companies started assembling here, but now they're all up in arms because it's just policy inconsistency. It's successive government, not just this government. So you can't. So my thing is, it's a damn good wake-up call. Let's get our house in order. Let's focus on trade. Without trade and investment, we got a good foundation now on the economic front. It's just a foundation.
No, Sujeewa, now you say that we have to do something what we're good at.
Absolutely.
If the government comes and asks you as an advisor, I don't think you'll be appointed, but I'm just saying, what are we good at? What would be your response?
No, so one of the issues on this Trump thing is that we have not taken into, see, we are a small country, no? We must take into account the services surplus that is there in favor of US. Look at all the hoardings in Colombo. You have the Hilton brand, you have the Marriott brand, you have Coca-Cola, you have Pepsi-Cola, you have Microsoft, you have Google, you have this, that and all this. All this we are paying. See, Trump's, it's no point finding fault. They have taken only the merchandise into this tariff equation. Right?
Yeah, but what are we good at as a nation?
So that's what we need to know.
We know that we are good at tea exports. We know that we are good at rubber. We know that we are good at coconut. We know that we are good at apparel. When you say diversify the export baskets, what are the other areas that we have?
Right. So we need to get into component manufacturing. That is, if you look at Thailand 20, 30 years ago, right? That's, they are a virtually manufacturing hub for that ASEAN region. Everything gets manufactured out of Thailand compared to Vietnam and China. It's a huge manufacturing base. So we need to start. We need to start small. So that is one area, is component manufacturing. For that, we need to make sure all our trade barriers are taken out. So we need free trade agreements. We need double tax treaties. We need all this protection that is in there, where it's preventing us from linking up with the global value chains. All that needs to come off, right? Policy consistency, and then we need to identify 2 or 3 areas. What are the ones that can give us, say, $500 million of exports? Because we need to diversify, right? What can we get? So maybe component manufacturing, warehousing and logistics for sure. I think we need to have far more emphasis on this, bring technology into it, make it accessible, allow companies to come and set up here, right? So that is one area for sure we can target, is warehousing and logistics. Mining, for me, mining is a low-hanging fruit. We have to do that. I mean, there have been enough studies done saying that there is enough opportunity here, starting right from Mannar right down to Pothuil and on the East Coast. Easily a $500 million industry on that, right? I think, see, we spend $300-400 million, Shamir, sending our kids abroad. You are a tea exporter now. You know how difficult it is to earn $10 million of export revenue. But we are very happy sending our kids abroad every year and spending $200-300 million. We can easily say, not that all will stay here. Out of the $300 million, I'm sure we can save $200 million. How difficult is it to build a 200 million export industry? Very difficult. It's a long journey. These are low-hanging fruit. Allow overseas campuses to come in here. Allow some medical schools to set up here, right? And there will be enough kids here. $200 million, eyes closed, we can save. Comes to the same. And here, we are talking revenue of say $200 million on export industry. This is straight saving.
No, but can we do that, Sujeewa? Now we know this government is a little bit taking a step back in terms of education reforms in the aspect that you're talking about. We know what happened at the KDU matter as well. You know, the teachers, the parents, the students went to court, and as a result of that, this was reversed. But do you think this government has that ability or the persistence to make that change in terms of education sector?
So those are the reforms that are required. So Dhananath touched on certain things. See, we have to do energy reforms, labor reforms. Education is really critical. What Prime Minister Harini is doing, very laudable, and we need to support that, right? SOE reforms, land. If you do these 5, you're covering 70 to 80% of what needs to get done. But they are all very difficult. So education, if you ask me, very sensitive subject. Look at what has happened. If you take the last budget, Shamir,
yeah,
our allocation to health and education is less than 2% of
5%.
Less than 2%. Yeah. They promise 6%.
6%, yes.
Can remember the 6% T-shirts? Allocation is, they allocated $600 billion in total. That is $2 billion. $2 billion on 100 billion GDP, 2%. 2%. We can't, and going forward, we can't allocate more than that. So, but we need to expand health and education. There's no doubt on that. So then you must get the private sector coming in, foreign investments to come in and say, look, support us on our health and education, because we need a educated society and we need a healthy society. But as a government, we can't. So your question, Shamir, I agree. So we need to keep pushing, just like the KDU matter. How did KDU matter get resolved? Students went to court and there was public pressure from everyone. From everyone. The reason is even some of the kids of the government MPs, they're studying at KDU. Current government MPs, the kids are studying at KDU. I don't want to mention the names of those MPs. So there was public pressure. So I think there is insufficient pressure on this, especially on higher education reforms.
Rohantha, you spoke about this geopolitics. Now, with this Trump tariff, right, the government is going to be very careful in dealing with China, Russia, right, because of the penalty tariff. I mean, going forward, how do you see? I mean, how does you want to see the government handling the geopolitics in terms of dealing with the Trump tariff?
See, it's a tough call, very tough call. I just returned from Jaffna because we are driving SME agenda from Rotary, and I was having a chat with the chambers in Jaffna, and they were saying that, for instance, the ferry between KKS and Chennai, huge tug of war. There is one large entity, top 5 company in Colombo, Sri Lanka, wanting to do the logistics. They have said they are prepared to do the whole logistics and the jetty. Then there is an Indian counterpart saying that they want to do the same thing. So right now it's at a stalemate. So we see all these stories coming saying that there is trade between north of Sri Lanka and the south of India going to boom, and there is going to be a large ferry that's going to be only for cargo, while there will be also for passenger traffic that can go up to 60 kilos to be brought in by each passenger. It's just it's only talk. So the way that I would, if I was advising, I would forget geopolitics and look at trade. Build strong trade links so that once you get the economy strong, politics will
but
come.
then you'll have to face penalty tariff as well, right? If you are going to build trade with China, Russia, or even India with today's context.
See, there is a extent to which we can export to China, because if you look at even if you look at the free trade agreement which is being driven with China,
1.459 billion population.
Yes, but if you look at what are the products that we can export to China vis-a-vis what are the products that we can export to India, currently in terms of the maturity of the trade talks that have happened between the two countries, obviously India is a quicker win. We know that currently there is 7 million pieces of apparel. It will go up to 30 million pieces of apparel if the comprehensive economic partnership is signed. India said that 30 million pieces, from 7 to 30. So likewise, very clear, we have only 15,000 kilograms of tea that we are allowed to export to India, and we know that 97% of the production of tea in India is consumed by the people. So there is an opportunity for us to also import tea. Now the question is, this hard decision has to be taken, because from what we saw with where the hands held each other at the last visit of the two presidents, it was very, very clear that the relationship is very strong. So, but that relationship has not turned to trade. It has never moved to trade.
My question.
The answer to your question is, I think what we have seen all over the world is that without giving priority to the political agenda, because the political agenda keeps changing every time, every 4 years, leadership comes. The countries that have given priority to trade and developed trade as a priority, then what happens is the people benefit as well as the economy gets stronger. I mean, the point I was telling before to Shamir was that, why is it that we have a 700 billion every day being borrowed every month to run our government coffers. Now the question is that we know even if we double our taxes, we can't cover that deficit. Yet we'll have to go and borrow. But then only way we can prudently and practically achieve that is by growing the economy to be 100 billion. Now how do we make it 100 billion? Through export industry.
Yeah, so, Dhananath, now one of the biggest issues that we have is exports. You know, as Sujeewa mentioned, Chayu said, Rohantha speaks about diversification of exports and all that, but this is not easy. Me hailing from an export company, I know how difficult it is to get some market leverage. As a country, what are the responsibilities that lie with the government when it comes to helping exporters? Now, example, right now the exporters are being taxed at 30%. This was not the case a few years ago. After Ranil Wickremesinghe came into power, the first thing he did was to impose a tax on all the companies on the same basis. But how can you encourage exporters? What sort of, now the budget is just in the corner. What sort of recommendations do you have?
The main recommendation that I have is get out of the way from the companies, because the more the government try to involve, that's the biggest hurdle for exporters. I mean, number of examples, even in your case, everyone's case, the more the government try to intervene, basically you are doing more harm than good. So it's mainly you step out, but you facilitate the need for them to explore. The challenge, Shamir, is in this dynamic world, we sometimes really cannot predict what an entrepreneur will really spin to make it a better export or take the advantage over the other market. For an example, about 20-30 years ago, no one expected a tab or a phone will really have this level of penetration. It was someone smarter. It was also an evolutionary process. You try something, you fail, you try, and then you basically make a breakthrough. So it's the same way that is going to happen. Same to an extent to our apparels. I mean, government provided the lands. It was our entrepreneurs who basically successfully export, and then now we are called the bra capital of the world, which was completely through their technology, sheer courage that they did. And
but
now,
Dhananath, now the electricity, the reform, it gives signal the other way, right?
no, absolutely. So that's why I said, what the government should do is bring the cost down for the manufacturers. For an example, the one is electricity. The second one, Sujeewa spoke about this, protectionism tariff on bathware, tiles and shoes. Because I have the data, probably someone, I mean, the viewers can see it. We have done an analysis on few cities on cost of construction. This is called the housing affordability index, and you will be shocked. And I think if any Sri Lankan who has built a house, I think they should be given a bonus or a some round of applause, because this is, we have to understand this graph. This is housing affordability index. That means compared to your income, the cost of a house. It doesn't mean just because you have an apartment in Colombo that you can also buy an apartment in Melbourne. But compared to your income, what's the affordability of the house? You will be shocked. We have compared the numbers with Colombo, Delhi, Dhaka, Karachi, Malé, Shanghai, Tokyo, London and New York. Do you believe that Sri Lankan's housing affordability index is higher than New York? Do you believe it's higher than in Tokyo? Do you believe it's higher than to London? We are only second to Shanghai. So this is the problem when someone try to put up a factory or expand their manufacturing, they are competing even higher cost than New York, Tokyo and London.
So does this mean, what I'm trying to say is, like, are you saying that we have to even open the imports? If someone wants to bring down cement, they have to have the liberty of bringing down cement. If someone wants to bring in PVC, they have to have the liberty. Then what's going to happen to the Sri Lankan manufacturers?
There are two things that can happen. If they are not competitive, they will go out from the market. But I have a suggestion. I understand, because there's politics also involved, no? Because overnight when you do that, there will be massive resistance. But our proposal is, okay, don't meddle with the tariff. If you really want to protect them, and this is quite unusual by Advocata, give them a subsidy directly from taxpayer money, because already you are doing it by increasing the tariff. You give it but with a plan, because now you can phase it out. Okay, we'll give a subsidy from taxpayer money, but we are not meddling with the tariff. So then the consumers have the choice to pick from any supplier, but you are giving a subsidy, but you phase it out over a 5-year or a 10-year period. But now what we are promising is we are trying to phase out the tariff. That doesn't work like that, because every time when you try to phase out the tariff, the lobby becomes stronger.
Yeah, but Dhananath, if you look at the companies that have invested so much heavily on Sri Lanka, now let's take companies that have really put their bread and butter on the manufacturing industries in the country. This is going to be a big problem for them as well, because they have to earn money, they have to think about the return on investment, because whatever you invest, at least within a 10-year period, you have to be able to get that back. Bank loans are not easy to come by. Sujeewa mentioned that as well. So these are not easy processes. So you have to protect the local manufacturer as well, isn't it?
My argument is otherwise, Shamir, because by doing it, actually you are harming the local manufacturers, because your apparel guy is going to go out of business with this cost of construction. Your tea is going to go out of business with this level of cost of construction. Your rubber guy is going to go out of business with this level of cost of construction. The local manufacturers
and the hotels,
because when your cost of construction is higher, it has to be added to the room rate, because generally all hotels have to be refurbished in every 5 years, and that is cost of construction. And when you add that, when you are competing with you're only second to Shanghai, that will add to the room rate, and your tourism becoming uncompetitive. So you have to allow tourist guys to go out of business. And those who are manufacturing those things are not exporting. They are exporting maybe a small quantity, but it is not competitive. At the same time, there's a myth that you think that you're saving dollars, but actually you're spending more dollars. I'll give you a classic example. Now, if you look at tiles, the main cost component of tile is energy. What you use a tile is basically energy. Now, where's your energy comes from? And that's the LP gas. And do we produce LP gas here? Because of that main cost component, you are importing more and more LP gas to keep your, say that your tile is locally manufactured, but actually you are importing more. If you import it from India or from Italy, your cost is, or like your dollar outflow is much less. And this was research proven. So that's the challenge on exports.
Right. So I have a question for Sujeewa and Dhananath on this. I'll come to Chayu in a minute. Now, Sujeewa, stock market. Now, I know you're very passionate about the stock market. You also have some interest, just for viewers' clarity and all that. Now everyone seems to be investing their money on the stock market. Now, because you are being taxed at 36% even for your interest income. Is this a safe option? Is this a bubble that we're experiencing in the stock market at present? Because numbers have been so good. It seems that everyone is taking the money and investing on the Colombo stock market. So let's start with you, Sujeewa.
Yeah. So I'll give you recently the Securities and Exchange Commission put out a note saying in year 2000, Shamir, if you had invested 1,000 rupees, okay, the present value of that today is 32,000 or 33,000. Over a 25-year period, it's gone up 33 times. That's what SEC said. Mm-hmm. Right? So the biggest issue in investing in equities is that it's a long-term investment. You cannot look for a short term saying, in 2 years I want to double my money. It doesn't work that way. It doesn't work that way. That's number one, right? So it's long term.
When you say long term, how long term are we talking?
I think you need to look at a good minimum. It should be a 10-year. Because
10 years in
10-year cycle. A 10-year cycle. Because the reason is this. At least you need to cover 2 election cycles, in my view. Right? Because there could be policy, because of policy inconsistency. Right? And see, the biggest factor that impacts the stock market is the interest rate. Now, interest rates are low, single digit. As you said, if you put it on a fixed deposit, you will get what? 6%. You pay 36%, you get 4% for a year.
Yeah, around 3.5 to 4%.
4% for a year. So if you put 100,000 today, you'll get 104,000. Right? So people think, no, I can get a better return than that by investing in the stock market. Right? That's number one. Number two, why is stock market safe? It's very well regulated. Right? It's highly well regulated.
But we've seen we've seen 2013 pump and
you will always have that odd case, but generally.
But that was not odd case. That was
I agree.
properly manipulated scenario.
Right? But it's well regulated. Right? Number two. Number three is you have an option where you want to invest. Do you want to invest in tourism? You want to invest in export companies? You want to invest in local conglomerates, banks, financial services, insurance companies, real estate, whatever you want. Right? So you have an option on that. And the good thing is you can get out whenever you want.
Right. So I can give you a classic example, right? Now
but keep in mind, it's 1,000 rupees invested is 30,000 plus
so that's
over a 25-year period, and that's what the SEC is saying.
Yeah, but that's in a good scenario. That is
it's not a good scenario. It's a 25-year horizon.
Yeah, 25 years.
No, say for example, say you came out from say your first job. You're 25 years, right? You went and invested some money, right? 25 years. 25 years down the road.
Let's say you invested 100,000.
100,000.
25 years ago, and then 25 years after.
So 100,000, you have to multiply by 30 times.
Yeah.
3 million.
3 million. So 3 million in the 25 period is value for money.
So then that's why. So that's why I said it's on present value terms that it was calculated, right? So it takes into account all the other factors that impacts it.
Is it worthwhile?
I would say.
Now I can give a classic example. There are most of the companies have issued their reports, and I think Sujeewa, you would have thoroughly gone through all this before coming to the show as well. Some of the FMCG companies, their stock prices, which were at around 50 to 60 rupees, have come down to around 31 rupees now.
So there are couple
in a period of 5 to 6 years. Now, if you don't sell it, are you expecting that to go up to 50 rupees that you invested?
No, see, that's why you have a basket of
that has to be diversified.
That's why you need that diversification. You need to see, and it's easy. You have the top 20 companies. So even if you don't know anything, you'll see, okay, because the stock exchange say these are the top 20, right? Top 20 companies. You invest just on those. You have no clue what this company is, and you are not financial literate, but doesn't matter. That's some guidance. You can go and invest on this, but it creates it's the place that creates wealth.
So, but there is no tax on this, right?
No tax. There's no tax on this.
Dhananath, since Trump announced about this, tariff on April 2nd, right? We have seen a drop or a depreciation in the rupee, 290 to now it's hanging around somewhere around 300. How do you see when the impact of the tariff actually have a take place? How do you see the impact on the rupee?
How I see it is mainly when the interest rates are coming down, and when the money being injected through purchase of dollars to build reserves, then your currency will have pressure. But we don't see excessive volatile at the moment. But if we try to push interest rates down artificially, you cannot really stop the currency being depreciated. Or if you try to intervene through the open market operations,
despite the tariff
will have an impact, because if your exports numbers are coming down, then the dollar flow will be impacted. But in that case, it's demand and supply. But what we see is it's excessive dollars in the market. That's why the central bank is constantly buying dollars. And even the export numbers, it has grown at about, I think if I remember right, about 6%, as per the last data. So at the moment there's excessive dollars. Actually, if the central bank stop buying it, actually the currency rupee should appreciate. But it's when the interest rates goes down, people consume more. When people consume more, means they are using more and more dollars.
Well, I thought it was the other way around. Now with this vehicle imports coming into play, Sri Lanka opening the country's imports, the rupee against the US dollar has to depreciate further.
There was, I have seen this comment multiple times. I mean, true, when you're importing vehicles, you have to spend dollars. But the truth is, you are not spending in dollars the first place. Or everyone who had bought a vehicle has gone and given the rupees to purchase dollars. So basically by giving the rupees, you are not spending on something because you have to give it from the system.
Yeah, but the LCs have to be open to those
in dollars,
respective,
true.
yeah.
But you have to cut down from somewhere else, because imagine if you are not, let's say vehicle imports are banned for the moment, for the time being. Do you think that dollars are going to stay in the banking system? No, because those dollars, the banking system will give it to someone else, because the bank cannot keep the dollars in the market because they have to make a profit. If they keep all the dollars in the system, how are they going to survive? They have to give it to some importer to import. So it is not the imports that causes. I can show it on like economic theory also, you can show it. But in reality what happens is, it is the interest rate, because most of these vehicle imports, it's about, depending on the category, the 50% is the credit share. Like you have taken a loan from the bank to import the vehicle. So you are importing from someone else's saving. So even if you don't import vehicles, someone else will take that money. So that's why when the interest rates generally goes down, your currency starts depreciating. That's why even at the height of all import controls, we had import controls on turmeric, on some medical equipment, on medicine, still the currency dropped from 180 to 360, because you kept the interest rates artificially down. As a result, you created an artificial market on Undial, and as a result, you really didn't have dollars. Completely the currency collapsed. So that's
But do you see the dollar rate going up against the rupee, or what is your prediction?
At the moment, central bank's mandate is they are trying to keep it at the 300 stable level.
At that level, right?
At that level, because they already there's excessive dollars in the market, and remittances are, I mean, it's quite stable and it's growing. Your tourist numbers, while generally on the tourists we have to count that room nights, because what we are counting is the number of tourists, and at the moment it's mainly the Indian tourists. So out of the inflow, the main tourist category is from India, but generally the longest stay is from Germany, Netherlands, so on and so forth. So as a result, your average stay or the room nights is going to slowly come down. So of course it's better to have higher number of tourists, but it's a number of room nights that actually counts.
Yeah, so Chayu, with all these good things happening in the country's economies, this is the first time that I'm hearing Sujeewa, Rohantha, Dhananath, all very optimistic about the country's economy. Look at the interest rates, it's still double digit.
No, interest rates are actually now in single digits.
No,
right?
single digits in terms of, let's say, a housing loans or of that sort, where people want to, it's around 13%, 12%.
Yeah.
Why isn't it coming to 9%? Because I remember in 2020, the lending rate came to around 9%.
Well, in 2020, they printed a lot of money to get the rate down to that level. I don't think that's what we want to have right now in that same context, the same driver there. But I think the overall point is like...
why isn't it coming down? If the country's economy is doing well, and the central bank in their policy interest rates always says to the commercial banks to bring it down, the commercial banks are not doing that.
No, I don't think it's correct to say that the central bank is asking the commercial banks to lend.
No, but of course they give a policy interest rate direction, right, every month.
So what they give is the rate at which they lend overnight to the banks.
Yeah, so they expect the commercial banks to comply.
No. So what that is what they give overnight. So there's more of a market factor. So the lending rates in the markets right now, the lending rates are reflective of the central bank's policy. I don't think there's too much of a difference therein. But I think where this kind of point comes in, the fact that like we have a lot of fiscal stress. So I think slightly different view to Rohantha's here, because yes, you have a lot of capital loan payments right now, and you have a lot of rollover of your interest costs. Usually that's not something I personally see as much of a problem. If you look at the government's non-interest and non-debt spending as compared to its revenue, we are at now in the third year in straight of a surplus. We haven't had that since the early 1950s. So that's 70 years we've never had that, and now suddenly we have for the third year running. Probably going to have it for a few more years at this rate as well. So that's a completely fundamental shift. You have a lot of fiscal space strength in the Sri Lankan economy. But
isn't that because we are not paying our ISP holders?
No, this is just the fiscal side. This is just the government's revenue and the government's completely excluding any of the debt side of things. So that's really good. On the external side, so even to that point on the currency they are in, so I think of the last 2 years where we had this what we call a current account surplus, we have more dollars we earn compared to dollars we spend, and again excluding all the debt side of things, just the kind of regular trade, goods and services side of things, remittances included therein. It was about I think $1 to $1.5 billion a year of a surplus. First 6 months of this year, we've already hit $1.5 billion in surplus. Biggest driver of that this year so far, last few years the driver was that imports was just really weak. This year imports are doing well. But right now what's happening is that remittance is growing at something about 20% year on year. Tourism is also growing at about 10% in terms of dollar value. You're also seeing a lot of these other small ones growing as well. I think port service is a really good example. Historically, we've done about net port services, so that is the kind of FX earnings you get on net basis has been something about 0.2% of GDP historically. Last year it was about 0.5. This year is on track to exceed 1% of GDP. That's $1 billion in net earnings coming from the port service, and that's a completely new context for Sri Lanka. So you have a lot of these points coming in. The issue that you have fiscal strength, you've never had that before. You have external strength, you never had that before. You haven't had the two of them together ever before. The problem is our debt is still at the 100% of GDP level. That will take a little bit of time to get done. Interest rates are a part of that, because interest rates compared to where inflation is right now, inflation is essentially averaging 0%, the statistical measure. Interest rates at 9% is relatively high in historical context. So that is part of what that is. So I think there is either a context where you have inflation changing or interest rate changing. I can't comment on that too much at this point, but I think the point being that Sri Lanka is at that point of transition, and that transition has started to happen. Has it reflected in all those points of variables? Not yet, and that probably takes a little bit more time for us to just get used to the context. Like you said, how often do you have on this program 4 people coming and saying the Sri Lankan economy is good? That's not common, right? You need to have this for a few more programs in a row, and then probably you might be able to see everything.
I don't know what Dhananath is going to say.
Chayu, now you're so optimistic on the economy and the numbers. Now, if you see the fiscal review report released this week, now it shows that the capital expenditure for the first 6 months is just 220 billion rupees out of 1.3 trillion, right? And we have more than 1.1 trillion rupees of capital expenditure or investment to be spent. How concerned are you on that, and what will be the impact on the future growth?
So yes, I think very clear that capital expenditure is being underspent right now. Always been the case in Sri Lanka. Every year when you don't earn enough revenue, you underspend on capex. This year I think the context is more the procurement processes and the projects are just not rolling. They're not getting off the ground, so you're not actually having the ability to spend even if you wanted to spend right now. It does, particularly for the long-term growth story. It obviously does have an impact. But I think my point is, again, you have an underspent capex budget and you're still growing at 5%. And that shows that there's another growth driver that's separate to the usual growth drivers that we've seen in Sri Lanka. The government spending on infrastructure, that filtering down into construction sector, that's filtering down into consumption. That's the usual growth story in Sri Lanka. That's not happening right now. And you're still seeing some level of growth even into this year as well. So what it tells me is that you are having new and different growth drivers functioning in essentially very theoretical ways, right? Like your inflation is being flat overall, some prices are rising, so the gap between that creates margins in the economy, varied things happening therein, but you're having these different growth drivers. On the long-term growth, this does mean it's different, but it also means that right now the capital expenditure that's happening in the economy isn't being done by the government, it's being done by the private sector, despite these constraints that we are in, despite the investment approvals not really coming in as fast as we'd like. Despite that, you are seeing, the classic example is one of the port terminals, the private sector one opened, the public sector one isn't, and that's, I think, the classic example of how the private sector is starting to drive more infrastructure investment in Sri Lanka now compared to the public sector.
So, Rohantha, now a lot of hotels have opened up. Now you expect all these 5-star hotels to have at least $250 plus. Now, if you go to a country like Greece, a simple 3-star hotel would cost you approximately around $200 a night. Whereas in Sri Lanka, that's not the case. Now, when you look at all these new hotels that are coming up, the average room rate at these hotels are going at around $215 per night. And then you see all the other hotels undercutting to match that price. So is this going to attract the top 10 tourists to Sri Lanka at any given point?
Which is what the industry is also saying, Shamil, because...
So shouldn't there be a standardized room rate?
I think what is important is more to decide who is the consumer that we are attracting and what is the quality of product that we are going to give. Because if you look at the last 3 years...
One thing is sure, now we are looking at the Indian market very aggressively, and the Chinese market. That's very clear, no?
Rhetoric is there, but the question is that are you really driving it with above the line campaign and below the line campaign? It's not. That's the problem. See, the point I was trying to say was that if you look at the hotels that have been given approval in a 3-year window, it's all three-star below properties. So I mean, you know, the process that takes almost 3 years to get a property running and going. So now the question is that, you know, there is a rhetoric saying that we should look at a $250 plus tourists coming in. The question is that what is our approvals for is number one. Number two is what is the stock of rooms do we actually have for them, and do we actually give them that kind of a experience to charge a $250 tourist? So
no, but is it really sometimes? I don't know. Rohantha, correct me if I'm wrong. I'm subjected to be corrected. Top end tourists. I saw this interview that was done by Margaret Robbie, a film actress. She's saying that she and her husband on a honeymoon went to an island which was like a Robinson Crusoe experience, where there was no mirror, there was no phones, it was just a shack. Yeah. But that attracted them to go to that country just to experience that at the end of the day. So don't you think it's the experience that matters?
Sure.
For the high-end tourist.
Sure. I mean, actually, very interesting point. If you look at the money that has come in to the country in relation to the tourism earnings, if you calculate and see, there's a leakage of 60%. The money's never come to Sri Lanka. So one strategy that has been done globally is that they are looking at rural tourism, so that then it doesn't focus to ABC destination marketing company or a tourism company, which is about normally in any country you have about 5 to 7, and it goes really to the lower end of the spectrum, which is the village and the community. So on this premise only, China developed this whole concept of rural tourism, and now it's catching on. So even in Sri Lanka, there are 2 target groups, 2 segments where they are doing a test funded by MFD, Australian NGO, where they are developing the whole overall infrastructure in terms of logistics in such a way that the whole experience is carbon neutral. And it's basically you experience a typical village, and the type of food you eat contributes to your carbon footprint and is neutral by the time you go.
No, if you look at Allah for an example, Allah doesn't have many 5-star hotels. It's all mostly homestays and very 3-star below hotels that you find. And anytime you go to Allah, it's full. It's very difficult to find seating at a restaurant or a bar or a pub. It's always full. It's
a case study of a game where you allow natural growth of the tourism industry without policy intervening. Vella is a classic example. And if you, Shamit, the point you mentioned that it's all 3-star, 4-star driven, that kind of thing, is because we have not looked at this, you know, aspirational tourism. We allowed the guests to come, experience the different products that it has, whether it be Little Adams Peak, or whether you want to go to the Mirjapokuna, or whether you want to go on a nature trail. So the experience is such that everybody by 10 o'clock is sleeping because they have to get up at 4 o'clock because they are doing adventure tourism. That's how the structure is.
And of course, didn't sleep at 10 o'clock in the night.
Majority. Other than for 3 places, there are 3 places. So there are 3 places in town which goes on till 2 o'clock. But that also, they have shutters that put in because it will not disturb the neighborhood. But the point I'm saying is that you're right. There is a new type of trending that is happening, and the question is that is our policy in line to those trends? Is the strategy unfitness which is there?
Right.
I mean, why would you want to give approval to 3-star hotels, but then you're going to develop a campaign for the 5-star tourists to come?
So I want to quickly ask one question from Dhananath before we close the show tonight. Dhananath, what is your growth projection for the year now? Because last time you came on the show, you said we'll be hovering at around 3.5% because we are not doing much. But today, in your opening remark itself, you said we might hit the 4.8% to 5%. sometimes whatever these economists say, we have to take it with a pinch of salt. No, Shihar, because you keep on changing more faster than policies.
Depending on the perception.
Depending on the perception and the country's sentiment. But today, Dhananath, with all seriousness, what is your projection for the country?
Let me clarify. The earlier what we mentioned was the IMF projection and the World Bank projection was about 3.5%.
Yes.
The first quarter is 4.8%. So if hopefully if everything was going well, there are no weather shocks, everything was going smoothly, we really do not know what Trump would do, President Trump would do and all those changes. I am confident that we will hit nearly about 5% if everything moves well. But again, subjected to so many shocks, that's why we also changed the numbers, not because that we just merely change it. It's because when certain incidents happen, of course the projections has to be upgraded or downgraded based on
what this government is doing right now in terms of, you said last time they are not hitting sixes, they're defending the ball. So in terms of that aspect of things, do you think that we are on the right track?
It is not about the direction also, Shamir, it is also about the timing. Because as I mentioned before, they are not doing anything wrong. Of course, today was an exception and this protectionism thing is an exception, but otherwise they haven't done anything drastically wrong. They are defending, and also we are, for the growth, we also had the base effect because our economy contracted constantly, and that's the impact that we got on the growth. So that's why while the government is slow on reform, that base effect will have an impact. But at the moment they haven't done anything wrong. It's important that they do the right thing. That means the reforms. If they do the reforms, because the reforms also to kick in and get the output, it takes about few years. So that's why at the last few shows that we mentioned, with the first 100 days that you have to do the reforms, then you can see some tangible results towards the end of the this parliamentary term. But if everything goes well, it will hit about 4 to 5%. But actually where we need to aspire is to go above 6% growth. And that requires a lot of reforms to be done when we move out from this, the base impact that we are getting.
Right. So Chayu, let's start off with you, the final round. What are your thoughts and what is the way forward? What sort of solutions do we have in hand in terms of getting the economy right on track in light of all these global shocks that we are experiencing as a nation?
I think it's have to start from the fact that the Sri Lankan economy is in a fundamentally different place compared to like last 70 years. Forget the governance side of things. Fundamentally, the economy functions on a different fiscal and external basis than it has ever done before. And that means when you look at from this point onwards, it has to be from that context they are in. How do you engage with that external shock that is, we don't even know what that shock really looks like tomorrow? That's really hard. I would say maintain the particular strengths that you have, the strengths of the new economy, strengths of the old economy, whatever you can maintain them, be agile wherever possible. And I think that agility is what economy is right now. Any economy that can remain agile right now, not get overly affected by the negatives or the positives, just stay on your feet, move where the tide takes you, but also be in control of how you move as well. I think that's the overall message I have.
Well, thanks a lot, Chayu Damsinghe from Frontier Research. Dr. Rohantha.
Final thoughts. See, I think 50% of this economy is small, medium enterprises. And, as I was telling you, we were doing a lot of work in Kurunagala, Jaffna, Gaul, and even today in 2 large trade chambers to understand what SMEs go through, meeting them. And it's sad to say, but there is no agency to guide them and see as to what kind of roadmap should a typical SME have to first of all penetrate the local market and then look at penetrating the global market. And there is a lot of rhetoric saying I'm giving a lot of financial incentives, new financial schemes, the credit guarantee scheme which says that I'm going to give 25 million where 67% is collateral free. All that access to finance is there, but what the SMEs actually want is some degree of hand-holding and how to grow their business, and that is not there right now. And I think unless the government plus all different service organizations all get together to give that SME direction, we will never ever get out of the current economic crisis.
Right. Thanks a lot, Dr. Rohantha. Dhananath.
The main risk factor that I see is the geopolitical risk that we face, because the rate that it is going, which is quite uncertain and unpredictable, and with all recent changes by President Trump, what it brings to the business environment is uncertainty, because no one is really stepping up and investing, because we really do not know what is going to happen tomorrow. Generally, it was said businesses can absorb bad news, but they cannot absorb uncertainty, and unfortunately that we are slowly getting to a period which is uncertain. In that front, I would recommend to invest a bit on the foreign services, because it's a challenging task to manage these three global superpowers. It's not going to be easy, because every time when there's a tariff change, they are going to negotiate, and that will have an impact by being in the sidelines. So that's number one. Number two, there is only one way out for Sri Lanka, that is to do trade. And trade is the only way out. That means you have to manufacture things competitively, and we have to export it, and at the same time you have to import, and you have to make that environment better. It was Kofi Annan who said trade has lifted more people out of poverty than all AIDS programs together. So in that context, if you are serious about taking out people from out of poverty in Sri Lanka, the trade is the only option. For that, you have to bring the cost down on upstream. That means the electricity, the cost of construction, the labor cost, and that's the main support that the government could give. You have to basically be a facilitator and be out of the system, and then basically the export markets can thrive. Even in this quite challenging geopolitical situation, also I think we should also avoid on the short term thinking, okay, India got 50%, now we should get benefited. There may be short term benefits, but we need to understand when your neighbor is in trouble, it can spill over to you very easily. So we should not go to that short term mentality thinking there will be short term sometimes benefits, but just because out of their crisis, I mean, if you are getting benefit, that's a different story, but we should purely compete on the productivity and competitive basis, because the challenges that the President Trump will do to this global web of trade, that will hit back all of us, and we all go downwards. It would be a race to the bottom at this rate of protectionism. So, and some will stay. So we should move away from that short term thinking, and we should seriously focus about trade, and trade will be the only way out for most of our people to come out of poverty.
Right. Sujeewa?
Yeah. So I think the end goal should be better living conditions. And I am not sure if you take the last 1 year, whether the rural farmer who is in Anuradhapura or Polonnaruwa has benefited, take that 12-month gap since last September to now, right? So we need to uplift the living conditions. I agree with what was said. So how do you do that? It's through trade, investment and reforms. So on trade, the reforms that we discussed needs to be done. Plug ourselves into supply chains, remove the barriers, protectionism, and make sure that there is focus on doing trade. So that's on the trade side. And investments, we have to work on FDIs, and we've got 20 billion over 50 years. Right? I mean, that's appalling. $20 billion in 50 years, simply appalling, right? And one reason is over the last 45 years, we've had 25 chairmen at BOI. Right? So there's no time for you to do anything. Right? We were at 25 years. From 1980 to 2025, we've had 25 chairmen. Right? So trade, do the reforms. On investment, do what is required to get FDI. Without FDI, we have no future. The other one is do the reforms. As I said, 5 key reforms: education, labor, land, energy, SOE. Without doing those 5 reforms, no growth. Thank you.
Some of the BOI chairmen are in Singapore hiding. I don't know, Sujeewa, whether you know. One of these 25 only.
One of them.
Thanks a lot, Sujeewa Mudalige. Sujeewa has been very vocal about the country's economy on this very show and outside as well. Thanks a lot, Dhananath, Fernando, for always coming and gracing the show. CEO of Advocata. It's always nice to grill you, Dhananath, about the country's economy. Thanks a lot, Rohantha, experienced marketeer. Thank you very much for joining us this evening on the show as well, and thank you very much, Chayu, Damsinghe from Frontier Research, for joining us on this very show. Thanks a lot, Shehar, who's our independent journalist tonight, joining us. Thank you very much for posing questions from our panelists. I'm very sorry I couldn't take most of them because you were commenting on most of the facts that were told by our panelists this evening. But if there were any questions, I was able to take them to our panelists this evening as well. So thank you very much for being a part of Face the Nation. As always, I leave you tonight with the quote, as I always do. There can be an economy only where there is efficiency. Take care and good night.